The Trader Cobb Crypto Show, talking business in blockchain.
Hello, ladies and gentlemen, and welcome to the Trader Cobb Crypto Show. Today's guest has a bit of a history. He's worked for some different tokens and he's created his own business that he's working on now. We're going to talk about both of those. He's a man from a technology background who understands coding, which is totally alien to me. We've got Jet Yap, who runs Scratch Cash and was the CEO of Canya token. Thanks for being on the show, mate.
Thanks, Craig. Thanks for having me.
All right, let's kick off and talk a little bit about your newest venture, which is Scratch Cash. Now, it's got a very catchy name. So tell us about it.
Yeah, so Scratch Cash is sort of an idea that I've had about 2.5 years ago. And obviously, this was when I was, going into a lot of meetups and talking to a lot of people, telling them about how great, like Bitcoin is and why everyone should have, some Bitcoin in their wallet. And there were some occasions where people were actually interested, and then they asked me, how should I get some? And I said, you got to go and start an account in an exchange, and go through some of these processes which I can share with you. And then people just sort of get turned off at that point.
Glaze over.
Yeah, so that was what really inspired me to sort of create this. So I think in July or August last year, when I came out of Kenya, I decided to just really, do this full time, and just was sort of like just scratching an itch, and hence where the name came from as well, Scratch Cash.
Works.
Yeah, and so how it works is that it's basically like a gift card. It's a $50 or $100 gift card, and you can buy it from like retailers that sort of stock the Scratch Cash cards. And you would just take the card, you would scratch off the panel at the back, which would expose a QR code. And all you have to do is just download the app on the Android Play Store or the Apple App Store. And from that point on, you can just follow the prompts on the screen. And, within about 3 to 5 clicks, you would get the coin in your wallet, provided that you already have an existing wallet. So it's a service, it's not a wallet.
Okay. Well, all this talking of Scratch has actually literally made me itchy, which is really weird. Okay, cool. So what's the end goal for it? I mean, what does success look like for you and Scratch Cash?
So the intention really is to allow people to, sort of buy into crypto in a more sort of like piecemeal, and you could sort of just share it around with your friends.
A gift card, right?
Yeah, it's just a gift card. So ideally, the point is I really wanted to, sort of share the idea about crypto, and a lot of the education journey is really getting people to just use it, to just, sort of have a feel and touch and understand it, because, technology is unlike a physical product, right? So like, for people to really understand it, like, they'll have to either download an app, and then they go through the notions, and then they get this aha moment, like, oh, I see what you mean now. And then that's when, that's when they sort of understand what it means, or why they should be having some of this.
Okay. So, I mean, look, on this project, you talk about retailers. How's that going? How are you going with rolling out across retailers? Obviously, it's, there's a lot of work to be done and it's relatively new, but I mean, how many retailers have you got, and sort of what's your aim for 2019 retail wise?
So at the end of this year, ideally, we'd like to reach out to, about 200 merchants in Australia. At this moment, we are still sort of working out the regulatory requirements, because, obviously that would also impact onto the development of the app itself. So in the event that we have to do, like this KYC checks where we have to identify everyone who's on the platform, then, we'll have to work out a way to sort of make that, kind of seamless within the app itself. So hence, once that's all sorted out, then, we would look at expanding our sort of merchant retail network. So by the end of the year, I hope to get at least about 200 merchants on board with this.
So what's the maximum you can put on a card?
At this moment, we have sort of limited it to about 100. and for good reasons. I mean, like $100 is sort of the point where, you know, people are sort of comfortable to spend, and it's not too big. And then if it's like, you know, too small, then, you know, the amount of crypto that you get in your wallet is probably not going to be too appealing. So, you know, the $100 is sort of like a sweet spot.
So does that mean it's a bit less of a regulatory hurdle? And I say this because of, you know, PayPass. Anything below $100, you don't need a PIN. So because they're smaller denominations, is it such an issue around the regulation side of it? Because, I mean, if you want to be a money launderer and you want to be legal activities, you're not moving money at $100 at a time.
Yeah, that is quite true. So like what I personally think is that, you know, the risk of money laundering is fairly low. That said, you know, we have rules in Australia, and there are 3 different bodies that, you know, have an overview or an oversight of, you know, cryptocurrency at this. And also I was in one of these conversations with Treasury yesterday, for about 4 hours. I did a submission to Treasury around some of my thoughts, you know, in the industry, and sort of got invited to attend this roundtable, which was really engaging. You know, I was kind of surprised, actually.
Yeah. Okay. Well, that's good to hear that that's actually conversations are being had at that level, which is fantastic to hear. All right. So where do people find out more about Scratch Cash before we go into the world of ICOs?
So we have a website. It's www.scratch.cash. So you can find us there.
Check it out there. It's not quite Christmas. As a matter of fact, we are a long way from Christmas, but there's a gift idea for you, ladies and gentlemen. For those that are too lazy to put any more thought into a gift, we just found you one. All right. Now, I want to go into the CFO role that you had at Canya, because there's a lot to talk about in this space. Obviously, Canya did an ICO. And you've written some pieces and done some bits and pieces about treasury management. Now, as the CFO, I'm sure that you're probably much in control of that. So first question is this: what did Canya raise when they went out to market?
So we sort of targeted to raise about 10,000 Ether, you know, and this was really, I think, in Q4 last, in 2017. So, you know, we had a sort of like a 3-month period where, you know, we had a period where we went through looking for private investors, and we're reaching out with private networks. And then, like, sort of once we were ready with, you know, all of the telegram and, you know, the marketing, it's quite a lot of work, man. I never really anticipated that, you know, doing an ICO is actually very, very time intensive, and it takes up a lot of attention as well. And then by then we sort of like managed to actually raise about, at that time it was about 10 million Australian dollars, you know, because at that time the ETH price, I think, was about 1,800.
So at its peak, you're talking about $14 million worth of ETH. And of course, you know, it should take time because effectively you're taking people's money. So there's a lot of work that needs to go into that. I mean, I work from a traditional background in stock shares and trading. And there's a lot of regulation, which the ICO market didn't and still doesn't have really at the moment. So yeah, there's a lot of work to go into, and there really should be. So from those heady heights, I mean, what did you get out of them? I mean, for me, there's a logical process in business. Okay, like if I go and raise, and let's say if I was to do an ICO right now, and let's say I raised $10 million of ETH at during a very strong period for that token. Now, for me, and I've seen this process not be followed more times than I have seen it followed, and I'm keen to hear your interest on this. But I mean, for me, I'd look at it and go, okay, well, how many years do we need realistically, based on our cost base, based on scaling, and you do the macro picture. Let's say 3 years to get to market, to get the exposure you need, and then to really turn a revenue to be able to give back to these token holders. Maybe because, you know, tokens are not, you know, they're not really tied into the equity of the company. But you get my point. So if you say to yourself, right, I need a runway of 3 years, and that goes for maybe year 1, it's $1 million. Maybe year 2, it's 3 million. Year 3, it's another 3 million, or whatever it may be. Once your milestones start to get hit around creating real, true revenue, so the business can support itself. So, did you guys do that? Did you get to the point where you went, right, okay, we need to sell, you know, at this price, we need to close out and move to US dollar or dollar tether or however the hell you want to look at it. We need to move $5 million across to give us that runway.
We did have a look at that immediately after we finished the ICO. That said, at that time, the challenge was actually the off ramps, right? So we had a bank account, but we were kind of fearful that if we were to move a large sum of money into a bank account, we would get our bank accounts closed.
Right.
As a result of that, so we pretty much had a healthy amount of cash in our banks. But it was not to the point where, we liquidated, say, 80% of our treasury and moved it into fiat. It was really due to the fact that we were uncertain around how the banks would treat that. And as much as, from my point of view, when I did the KYC, I'm quite comfortable around, the whole process and the identities of the people we've collected them. We actually use a third party as well. So we did this sanction checks, potentially exposed persons, and all of it was all right. But we didn't know how the bank would actually take it. So if the banks, they just say, sorry, man, we don't feel comfortable with that, then then we would have ended up in a situation where we would have all the cash frozen. So as a result of that, we probably only liquidated about 20% of the cash at that time.
Yep. And did you split it across multiple bank accounts? Because I know that some of the big four here in Australia in particular, during that hype, that was when you raised, they were shutting down accounts. They were halting accounts. And it's disgusting. I mean, look, it's my money. I'll do what I want with it. You know what I mean? Like, I don't understand that. And I find that to be a very, 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 banks should have control to a certain extent, but not of my money. I can do what I want with it, especially if there's KYC in place where I can prove this is not nefarious dealings. This is just the way the new world is moving. So the banks did shut a lot of that down. Now, what we did as a business is we were shut down as well through a payment gateway. We opened up several different accounts. Did you guys go through the same process? So effectively, instead of dropping $2 million into one bank account and going, please, please, please let it work, you split that over across, say, 4 bank accounts. And we started to target the smaller banks because we saw that they didn't have the market share and they're probably more lenient towards keeping a client, as opposed to some of the big four where they saw the risk being harder, and they're like a cruise ship. They take a very long time to turn. Is that the sort of process you guys went through as well?
So at that time, we didn't really see this as a major issue. So we actually maintained one bank account with one bank. And actually for that period, we never really got into any sort of issues with the bank service itself. So I guess that was, one of the good things for us in 2018. We never really had some banking challenges. I think for the most part, it was actually getting all of the transactions that actually happened from the ICO, down to, the day-to-day transaction, and then, getting that into a readable format to be able to prepare, the financial statements and the accounts was actually really, really challenging.
I can imagine. I mean, what we saw, the boom go through. Actually, the good thing about the boom that did occur on any liquidations, of course, you need to pay tax on that as a business, but it didn't, the market had come back significantly within that tax year, so that you could actually, it wasn't such a bad thing. Like if the boom had have happened between sort of April and July, you'd be liable for quite a tax bill, but it had come off quite significantly by that time. What I find interesting though is that the CEO, I think it is, of Canya, I've forgotten his name. I do apologize. He now talks about what not to do in ICOs. And I find that quite remarkable. I mean, here he is with, $10 million worth of ETH and a very long runway. Now, I'm not criticizing. I'm just sort of thinking, how do the token holders feel about him going out and doing that, given the fact that, okay, you liquidated, let's say you liquidated $2 million worth. I'm not sure what your burn rate was, but obviously the runway significantly shortened as the price fell. How did you guys get around that? And what was the vibe within the offices at that moment in time? And you're the CFO, you're the one that had control of the keys to the castle, so to speak. Well, at least opinion to the leadership. How did you guys get around that? Because it was getting pretty heavy for a while. Your 10 million went down to what, 5 million really quickly, and then 4, and then 3. And of course, we've seen what ETH has done. How was that? How did you guys handle that? Did you have hedges against ETH? Did you scale out on the way down? Was there ways of which you could sort of see the writing on the wall and prolong your runway, because of course funding in business, whether it be through an ICO or through an investor, it's really important to be lean and mean. I think that's where a lot of ICOs have struggled. To go and raise, it's kind of almost like a reverse business model, right? Usually you build a business, you do a seed or an angel, then you do a series A, B, C. If you get that far, most people don't get that far. They go in and they do a seed or an angel and they build and build and build. And very few actually go into a series A, depending on the scale of the business and what they're actually trying to achieve with that. So effectively you raised a series A or B in one go. Now, with that comes a lot of money. Now, I've spoken to a lot of VCs and private equity and investors as well. And often they say that too much money too soon can ruin the culture within the business, and it doesn't make them as hungry. Did you see that at all? Was there any issues in there that, was there any massive parties where you were getting Snoop Dogg like Ripple was? Or were you pretty grounded throughout the whole process? And look, I'm asking this not to criticize. I'm asking this for some honesty, to understand the inner workings of a CFO within an ICO that did raise to the tune of $10 million.
So I'll give you my end of the story at least. So when the ICO actually launched on KuCoin, I was actually frantically trying to send 3,000 people their tokens so that they can go and trade on the market.
Yep.
And in hindsight, I would have looked back and said that, maybe what we should have done is we should have just went on a party for 8 weeks, because that would have just cooled off the market completely. Instead, here I was trying to send, tokens to people, and, and then I watched the price just go plummeting down, and it was heartbreaking, man. It was like, all of the goodwill that we've accumulated, and then, as I sent tokens out to people, I sort of felt like, oh man, these guys are just going to just drop this on the market and crash it, but that's also part of the ICO space itself. And for me at that time, the responsibility was, we said we were going to commit giving people their tokens. So like, if we didn't give them their tokens, then we fell short of our promise.
Yeah.
And so but once it goes out of our hands, I can't control the market, I can't do anything about that. So as a personally vested person as well, I've put in money into Canya, and I've only really pulled out, money in 9th of January this year. So I really stuck through, the full year, and I watched 98% of my holdings just disappear into thin air. So that sort of experience around the whole market itself, I think caused a lot of uncertainty in terms of culture within Canya itself. And obviously me being in finance, I'm the most anxious one. And here I was, trying to tell everyone, we have to really start looking at generating revenue. That said, it was not easy for, a young startup with, a developing product to really start going to revenue generation mode, right? So, and there were also a lot of ideas that were being explored in order for the team to continue doing what they were doing. And, there were some things that, I guess, some decisions that were taken around March last year was, to set up a team in China. And at that time, China still looked very bullish in terms of blockchain adoption. So, we thought that perhaps having, someone on the ground would allow us to, have a better relationship with the parties in China that were really pushing the agenda of blockchain. Now, around May or June, that obviously, turned around, and, the government just went, I don't think we want to sort of allow this thing to start too soon. We want to, sort of drill down and research on it a little bit. And that's when, obviously the whole market started to cool off quite drastically. And at that time also, we started looking at cost-cutting measures. So obviously with me being the CFO,
you're one of them.
I was the one that said, all right, you're not going to set an example, so I'll sort of take a step out first and, and pass on the baton to someone else to try and manage the development side of things. Because at that time, I was not really, doing much to offer my value. I haven't really gotten into coding at that time yet. So I was not able to really, lend my perspective around, coding and all that. So that's why I just sort of departed around July last year.
So given you time again through that whole process, what would you do differently?
If I had to do that all again, I think the first thing is we would have introduced a lock-in period for token holders. So that would have really curbed speculation on day one. Once we curb that, then we wouldn't have so much noise on Telegram channels as well. So we could actually do work rather than, spend 4 weeks trying to tell people, how the market works, And I think the next thing is we would have probably taken out 80 or 90% of our money and, save that in cold hard cash. At that time, I think, we were still quite idealistic about, the whole idea of having a new world, a new utopia, and
it was almost like a badge of honor. It was almost seen as a bad thing to get out of your ETH and go to dollars. But you know what? Business is business, right? You got to do what's right for the business. But look, and you're not the first to falter at that level. I mean, mistakes have been made across the board. I've seen it time and time again, and especially, and I'm not saying this directly at you. I'm talking about it broadly. You give a bunch of young guys and girls $10 million that have very little business and treasury management experience and market experience. I think that's the bit that was lacking. You can have business experience, but as soon as that greed comes in, and when I say greed, it's an emotion of the what if. If we sell now and it goes to 3,000, how are we going to feel? That market exposure, understanding that things don't go up forever and you need to hedge your bets and you need to get out and you need to scale out and you need to manage what's going on underneath. During that hype cycle, a lot of people, had never been through it before. They'd never been through a market cycle. They'd never been trading shares or foreign exchange or commodities or bonds. They weren't used to market cycles. And of course, with that hype, it kept inflating, and everyone thought it was going to go on forever. Someone like me, it was pretty clear it wasn't. And I'm not saying that there's anything wrong with it. I mean, I carry 13 years of experience trading markets, and that's what I do, right? That's what I do. I'm not out there, coding. I'm not out there doing ICO. So it's a different world for me. I look at markets and I know what they do. I've seen it enough times to understand that. And I think that the biggest learning through that ICO experience was exactly that. It's about understanding market cycles. Now, one more question that I have for you. The ICO market has cooled off. We are seeing much more, I suppose, much more offerings that have a lot more grey hair in the team. So proper businesses, businessmen, businesswomen coming in with corporate experience and entering into the market. So there's still some very good projects coming out. There are fewer and far between. You can still raise through an ICO. Do you think the STO is going to make somewhat the ICO redundant?
I do not think so. I think that there is a couple of distinctions between, say, a utility token and also a security token. Particularly, I guess from a security point of view, we look at it, and for most people, they either look at, a business that they will have some sort of equity in. If not, a business that will generate ongoing dividends, to basically, feed them a return on investment, right?
Yeah. Yep.
And in the case of a utility, what I noticed last year was that a lot of people that went out and did marketing were a little bit over the top, with the claim,
the hype.
Right? And because of the claims, your average person on the street, they can't really discern whether that is a legitimate claim or not, and they basically buy in as a sort of
emotion-based
of an influencer, or they read an article on Reddit and then they decided to put in a substantial amount of money into a project. Now, obviously, I guess from that incident itself, even for me, I look and say that for this market to really mature, we have to put in things like fiduciary reporting, to be able to even put out the annual reports. Like for example, like the token, how much money was raised, which were the wallets, and that would have been good practice. And we should be aiming towards a point where we can actually do that. And I mean, that's not going to really stop people from, say, taking the money and, going out there and buying a new car with the money. But at least, you can see that it's now published, and you can see that, on this day, there was a new car that was being bought, right? So
yeah,
that's just, I guess, from an investor point of view, so I was wearing a few hats last year, and one of the hats that I'm still wearing is as an investor into a crypto project, right? So with that hat, I look and say, I would really love to see, like some form of reports, right? Like a burn report, or,
give me something, right? Tell me what's up.
Yeah. And I think that's where I look at the direction of this whole space going.
Yeah.
Regardless of whether it's a security token offering, and if it was a security token offering, all of these things would have been mandated by the existing laws anyway. So the only area right now is that the utility token sector, how are the governments going to sort of like treat this area? Is it going to be sort of looked at with the same lens, which I think that will make it very difficult for people to do like a utility token in Australia, and it might stifle innovation here. So I guess that's a decision that really needs to be taken into consideration by people sitting up there in government and in power at the moment. Though I guess with utility tokens, it opens up a whole new ball game for like your average person on the street as well, because I look at utility tokens in a way something similar to a Kickstarter program, right? Like,
absolutely.
I want to buy a new pair of headphones. It costs $500 on retail. And right now we haven't done anything yet. So, if you give us $100, we'll go and, acquire a manufacturer and we can sell it to you at cost price, So I think that's sort of the idea that I would have for utility token. So in a way, I would sort of treat that money that I put into a project like that as a donation. I don't expect that project to sort of like, turn straight away and create a product.
But you get something back.
Yeah, but if it does, then, it would be exciting because I would have gotten, a revolutionary pair of headphones. So I look at it as the same concept. It's just that, how do we sort of manage the risk so that we prevent, I guess, the bad players from coming in and executing, those market trades that really cause damage to the overall ecosystem.
Yeah, absolutely, mate. I hear you on that, and it's look, it's an ever evolving space. It's a very new space, and it's something that look, there's so many changes constantly within us and within our crypto asset space, let's call it. The STOs, the ICOs have hurt a lot of people, and for that, there's some very unscrupulous dealers out there. There's some pump and dump groups. There's all sorts of things that really get my back up. I've invested in 2 ICOs. These are my decisions, but I'm an investor. That's what I do. I'm an informed human being who understands the risk, and I'm happy to take that. But for a lot of people out there, they would not, and they have been hurt. And a lot of these projects have been irresponsible. Now, I'm not relating this at all to Canya. I'm just saying in general with ICOs, I think the STO market might bring with it a little bit more, as there is regulation there, and it is an asset class that allows us to provide liquidity where liquidity was once not available. So I see it as a very positive space going forward. But look, it's been an absolute pleasure talking with you, speaking about your past experiences. Your most recent project, which I'll remind everybody, is Scratch Cash, which is scratch.cash.com.au.
Nope, it's just scratch.cash.
Well, very sneaky. There you go. Scratch.cash. Jet Yap, the CFO or CEO, I suppose, of Scratch.cash. It's been an absolute pleasure catching up with you. I thank you for your honesty and your openness to share some of your experiences with us and the audience.
Thanks for having me, Craig.
Excellent, guys. Ladies and gentlemen, boys and girls, have a fantastic day, and I'll speak to you again very soon. Bye for now.
The Trader Cobb Crypto Podcast is hosted by Craig Cobb. All Trader Cobb courses, products, and tools can be found at tradercobb.com because experience matters.